2025 is a very difficult market. Right now, we're experiencing a crash. We're no longer in correction territory. And I want to be honest about my losses and my plan moving forward in this market and what I'm doing with my money. My portfolio year to date is down 19% or $800,000. And what makes this very difficult is I actually saw that Warren Buffett was piling cash and I wanted to reduce some of my exposure to the market. I don't believe in timing the market, so I put a lot of my money into Apple stock. However, Apple also experienced a very big crash. You can see Apple right here. I'm actually down 2%. So I was up hundreds of thousands of dollars on Apple, and now I'm down on the position, which is pretty shocking to say the least. In fact, I'm kind of a loss at words because I didn't really expect the market to tank this much. And I guess it kind of makes sense because with tariffs, that has a really huge shock to the market. But with the stock like Apple that has a low beta pulling back this much, honestly kind of makes no sense to me. And I want to say that I feel pretty bad and sorry for like making a lot of bullish videos and not really like expecting for this to happen. And I guess 2020 is, easy to say, right? It's easy for me to say now, okay, well, yeah, the market's in a difficult spot, but I wish I would have foreseen it a little bit more. However, I was like doing research into like who actually was able to like protect themselves in this market. And it actually seems like nobody really was. If you look at Tesla's down 39% year to date. Nvidia's down 32% year to date. And I wanted to compare my portfolio to QQQ. So again, let's go back to my portfolio. Year to date, down pretty much crazy amount, right? And this does have like a lot of implications. Like I'm not gonna be able to spend money the same way. I'm gonna have to save more. And I think that we're all in this together. Like we all have to kind of be more mindful of what we're going to be spending. And the best strategy is still going to be dollar cost averaging. Even though I don't have any cash, I know my buying power here says like 4 mil, but I don't have that. That's just basically margin that Robinhood is calculating. My actual cash amount is pretty much zero and I'm fully invested. Now, I will say that I did kind of notice some warning signs in the market, which is why I have sold out of Tesla and Nvidia a few weeks ago. And I mentioned that in my community, but I have a lot of stocks that are non-growth related. So I have Walmart and Apple, but still like they're just not really protected. I ended up losing a bunch of money, but yeah, the performance year to date is like negative 19%. And if we take a look at QQQ is down like negative 18%. So can't be too tough on myself because the performance that I have versus like the market, which is like QQQ/SPY, pretty similar. If I was all in cash, and even when I saw some warning signs, if I went all cash, I feel like that would be market timing and I would be making a huge bet and risk with not only my own money, but making videos and saying, hey, I'm all cash. Yeah, sure, I would have looked like a genius, but also timing the market is like one of the hardest things that you can do. Even Michael Burry, who like timed the market in 2008 and made a lot of money, he's been a bear since 2023. So just keep that in mind. Like right now, 2025, like he's been a bear for 2 years, which means that he has missed out 2 years of gains. And if you zoom out 2 years ago, the market is up a lot more than the recent crash that we're experiencing. I want to call this market a spade for a spade. It's not looking good. Like things are probably not going to get better for 6 months. And that's okay. Like we can't always be making money in the market every single day. Yes, there's some strategies, maybe like a zero DTE strategy, which can make money daily, but avoid like the overnight big fluctuations. However, no strategy is perfect. Like a zero DTE strategy is not going to be perfect. Obviously, me being an Apple was not perfect. Like Apple, although it has a low beta, which means that it fluctuates less with the market, and it's a value stock, like the PE ratio is way lower than the other Mag 7 stocks, wasn't protected whatsoever. I lost the same amount of money by being in a low beta, lower risk stock as I would have basically in like the highest risk stock. So it didn't really help to be in a stock that's more value versus growth. And I talked about this in my yesterday's video, but I invested in Kraft Heinz because, I wanted to have more value. In Kraft Heinz, they sell ketchup and they're safe, right? Everyone like eats ketchup and the company has a super low price earnings ratio. The company is a value stock, it has lots of dividends, and still like it's down, as you can see, like 4% in a single day, which is not that much different from something like Amazon, which is down 4.6%, or Walmart, which is down 4.7%. So there's really no hideout spot. My plan is basically to protect myself as much as possible. However, it's not really possible. Like I'm just participating participating with everyone else. And we're also going to participate in the gains and good performance when good times roll around as well. And that's the market. Like, it's been around for a very long time. And the fact is that every 2 years, there's a 10% correction, and every 4 to 5 years, there's a 20% crash. And we've already had the crash. So at this point, there's probably not that much more downside. And although it sucks, and seeing my portfolio at 3.72 million, I saw some of the comments. People are like, well, you're down more, aren't you? Well, no, I've done my best to sell covered calls. I have, for example, sold covered calls on Apple. I've sold covered calls on Palantir. And this didn't really save me, but it has protected some of the downside. Maybe some people thought I might be down 50% or something. No, I'm down basically 19%, which still sucks a lot. I mean, can't eat at fancy Japanese restaurants right now while I'm in Dubai. I went out dinner for 2 and spent $1,500, and I was like, ugh, I feel it now. So yeah, it's going to be difficult, but with time, things will improve again. And the 2 ETFs that I ended up investing into are XLY and XLC. And that's because I don't believe in having cash. Learning in college, what finance textbooks say and professors say is that being in cash, you miss opportunities in the market. And the biggest opportunity in the market is that time makes money, and money is valuable today, and it's more valuable today than tomorrow. And basically the markets are always rising over a long period of time. There is no 15-year period where the market was down. There's very, very little periods where the market was down over 10 years. There's some periods where it was down over 5 years, but literally the majority of the time, the market is up year over year. So because you can't predict it, right? If you try to predict it, missing some of the best days literally changes your performance by 50% by missing a few days, right? It's kind of tough to make this video today and to own up and to take responsibility and to be transparent about the losses of losing $800,000, which is, several luxury cars or a down payment on an amazing house in Miami, Florida, or the value of a whole house in a cheaper cost of living place. But hey, that's the game that I signed up for. I was an investor back when I was 19 years old. I'm in my 30s now, and I'm not going anywhere. I'm not gonna sell all my shares and go running like a dog with its tail behind or between its legs, right? I just can't do that, because I do have the confidence that this is a good opportunity, that the market will go up eventually. And that's because I'm betting on America, and America is always going to win. It does look like Trump is crashing the market, and I know there's 2 parties, mainly Republicans and Democrats, and there's some disagreement. And truthfully, I don't really have a side. I'm on the side of making money, and I do believe that America is going to win because of innovation, because of hardworking American people, because the best people do go to America and they drive the economy, and we have good innovation. And what I want to point out is that there's a really big difference between the market and the economy. The economy is not crashing. The market is crashing though, because it's reacting to a new policy, a trade war essentially with China. And this new policy is having just a massive impact on the market. It's shocking. And the reverse tariff that we see from China is also shocking, because it affects a lot of small businesses. It's going to affect the consumer. And this is surprising. No one thought that it would get to this extent. But again, a lot of this has already happened. The Band-Aid has been ripped off. So at this point, yeah, we can see some more downside. Not gonna lie, it's possible. Nvidia at 92, maybe goes to 85. There is no true technical support in a market that's crashing. There's just not. And right now it's a lot of emotions and a lot of fear. The fear and greed index was what, I had in my notes, the fear and greed index was 6. Literally 6 out of 100. And Friday we saw the 29th worst day in the stock market since 1980. I'm pretty sure it was even worse than that, because the market, you can see my portfolio is down. Essentially, it was 5% in one day, 179K. In 1 week, I'm down 8.94%, which, to be honest, is about in line with S&P and QQQ. So it's actually not too bad on a relative basis. And I said in my yesterday video that there's essentially 2 ways to lose. There's one way to lose is if you completely sell out and you're a dog with your tail between its legs and you're just I'm out, I'm done, I quit. Well, then yeah, you've lost. like you've finished the game, right? But if you didn't like finish the game, then we still have like a lot of time, right, for the market to rise. And it will. It's just a question of like if. It's not a question of like, you know, my bad. I'm just like so shocked that I'm down so much. I meant when. Like, it's not a question of like, you get what I'm trying to say, right? It will recover. I keep messing up, but you get it. Like, it's going to recover. And the most important thing that we should be doing right now is that I should probably be talking about saving money. I should be talking about waiting patiently, because I think those are the three solutions, is like waiting patiently for the recovery. I don't have any cash. Like, it's impossible to have cash. Like, the market's down like 7 weeks in a row or something, or so many trading days in a row, and I put my money to work. So again, it's waiting, getting as much cash as possible, which, you know, for most of us, it's every 2 weeks. For me is kind of as well, like whatever money I get, I'm going to try to put it to work. Probably not going to be that much, but you know, as much as I can, I'm going to try to put into the market, wait patiently, and just realize that it's okay, because value stocks didn't do a whole lot better than growth stocks. And I've been saying I'm going to value, but it doesn't really matter. Like, in a market crash, value doesn't do anything. All these like videos about hyping the market, like buy this and this is going to make you a millionaire. Like, right now, just waiting and like doing nothing is going to have the best impact. So some of you guys might think like, okay, Henry, you're a moron, or you might be thinking like, president's a moron, or like, I'm stupid. There is truly no way around it. Like, there is no investor that's up. And like, whatever YouTuber is making videos right now being like really bullish is just kind of like doing it for, I don't know, for like views, and like putting on a facade or like an act that like, yeah, it's good, I'm making lots of money. Like I don't know who's making money. Like, truthfully, nobody's making money. Like, let's be honest. No one's making money besides like Warren Buffett, and he's still down. He's just down less because he has a lot of cash. But like, yeah, unless you're like Warren Buffett and like you kind of predicted this market, then no. You gotta like zoom out though and realize that over the next like 1 or 2 years, this is probably not gonna matter too much, which is like the good news and like the bright side of this story, and why I'm trying to keep like a level head here, despite being down life-changing money. Like, again, pretty life-changing. And I was getting a bit cocky. Like, you can actually see, let me go back to year to date. I was actually getting a bit cocky here. Like, my portfolio hit 4.45 mil. So I was like, okay, I'm gonna hit 5 mil like in the next 3 months. I thought I was, but yeah, I mean, everything happens really fast. And that's also a good thing, because typically a market crash, I think, lasts around 9 months or like less, or like even 6 months. So that's good, because pain is kind of like behind us. And yeah, in some point in like probably next 3 months, we're going to get some type of recovery, and we're probably not going to recover to an all-time high, and that's fine. Like, it would be nice. Like, I want to get back to 4.45 million, but look, I'm going to look for opportunities when the market stabilizes. Right now, like, I don't even have that many words to say. I think looking for opportunities is probably a bit too soon, and just broad market dollar cost averaging is the way to go. SPY, QQQ. I mean, I have XLY, which is the consumer discretionary ETF. I can show you like what XLY has. It has like, you know, the top 10 stocks are going to be like Starbucks and, well, yeah, Amazon, Tesla, Home Depot, bookings. Yeah, there's Starbucks, actually pretty low on the list. Well, it's not that low. The top 10 actually make up like 68% of total assets. So I'm basically just investing into SPY, but picking like pockets of it. So the communications ETF, XLC, has like Meta and Google. So like, I love Meta and Google. And then XLY has a whole bunch of Amazon and Tesla. So you can basically say I'm just fully invested in the market. Anyways, let me wrap it up with this. Information technology is a sector that's most exposed to foreign trade, making it especially vulnerable in the current tariff environment. So I am a little bit lighter on like direct exposure, although I have the ETFs that I just showed you. I don't have Tesla and I don't have Nvidia shares at the moment. And I told my Discord community that several weeks ago. However, me getting out of those stocks hasn't really saved any money. So that's the market we're in, and I'm gonna be honest about it. Last thing is be confident. Things are gonna be all right. I mean, we're gonna get through this together, and it's just a matter of time. So things will recover. Like, that's a fact for sure. So yeah, let's see what this week brings, and I'll make some more videos and try to navigate you guys as best as possible, but we'll see. We'll see. I'm confident that things will recover, but this week might be a bit hard. So let's prepare for that.